I got it.
All right, Shake, we're just getting started, so we'll, you wanna go first, or I'm gonna do a little market outlook?
Yeah, I mean, I'll tell you my outlook is pretty simple. I went over it in the shakedown last night. I mean, let's just use your charts. We got that great jobs report Friday. I think, for this narrative driven market, this market that moves so drastically on any economic data and treats the economic data like it's the only thing that matters for the next, couple weeks till the next economic data, which is going to be CPI this Thursday. I think we're set up for a really huge bear market rally right here. I think I'm going to trade really aggressively to alongside this week. And then I believe, I'm coming in with a thesis that we continue to bid up into Thursday, it begins to chase, and then Thursday CPI comes in light, and that gives us another huge move, and all of a sudden we're SPY 410, 420. I think there's a few times where you kind of not have to. I mean, it's really advantageous to just be overly aggressive. I'll give you a quick story. I was watching the Lions game last night. I don't know if anyone saw that, where they were just like so incredibly aggressive. And the coach was talking about how, one of the lessons he learned, he's like, sometimes in life you got to go away from the analytics and you just got to, go with your gut and be really aggressive if everything is lining up. That's kind of the thing. I think we're setting up for a big bull run here in the next 2-3 weeks. January is seasonally great month for the market. Put call ratio is insanely, favoring puts. It's just a lot of things that point to, and then we're starting to see charts come around, and we're seeing this consolidation break the upside. So I'm gonna try to trade aggressively to alongside. I've got a ton of charts that I just posted in Shakedown. I mean in the Discord, but that's pretty it for me. I think because the jobs report we got was exactly what the market wanted to hear going into it. It was, how can there be a positive from this jobs report? Like how? Because if number is too bad, then it's a terrible economic number. Yeah, it's good for Powell's doing his job, but it's still a bad economic number. If the number's too good, then how are we gonna fight inflation? It's not coming down. But it wasn't. It wasn't that at all. It was the perfect number that points to a soft landing, that points to economic slowdown, but not an economic collapse. And for the next week or 2 weeks until we get these next numbers, that's going to be the narrative that drives the market. So I'm going to be trading aggressively to alongside. So that's it. I got to set alerts though. So that's my guest appearance.
Thanks, Jake.
Hope you enjoyed. I'll see you all in 3 minutes in the chat.
Yeet. Ben, you're muted.
There we go.
There we go.
Okay, so other than that, other than what Shake mentioned, again, we got the 10-year. We're seeing lower pivot highs, which is a great sign for those looking to buy homes in the near future. I would expect some type of retest of this major pivot low in, probably take a few months, but just this kind of stair step pattern, kind of back lower. Sector wise, again, in a very similar camp as Shake, again, a lot of these little bases that we've been seeing, they look like little bear flags after the run up we had in September going into December. We're seeing pretty much all of them break to the upside. Even the weakest sectors, which were telecom and consumer discretionaries, both also looking, nice little, run up off this little base into, its major resistance. We're seeing the same with like VCR getting a little bit of a bounce off these lows. So even the worst sectors are still kind of catching a bid, and you kind of have everything, when everything's moving in the same direction, it tends to go that way, in the short term. So a lot of these sectors are still within their recent ranges. Most haven't really broken out except for maybe materials out of this little base, but a lot of the other sectors are still within that overall range where we should expect at least that run up back into resistance. And it probably still needs some time to consolidate. Again, we had a lot of names last week, particularly on Friday, breaking out. Again, I had 5 or 6 orders in. Regeneron went, closed okay. The CTVI, closed phenomenally. TGX closed great, blue sky breakout. Same with ELF, same thing. I had a keystroke in AFLAC and missed it, but again, that one closed amazingly. So like Shake said, a lot of these charts coming back around. Sector wise, everything's looking very strong. But the only thing to keep aware of is if you missed a lot of the trades on Friday, you don't want to start chasing. So if you missed CTVA, for example, there's nothing you can do today. There's no trying to buy the pullback. There's no trying to buy continuation. Like if the thing triggered on Friday, and you're flat-footed, that's just a part of this market, but don't overextend yourself right off the open because we had a very strong close on Friday. So you still need to wait for your spots. There's not much I have a really crazy I'm looking at last week. See, this court is the one that didn't go on Friday. I'll buy through 21. I'll keep it versus 2050 just for like a little low risk, high probability of it failing trade. But that's really it on my end. Having if there's any ideas that you're looking at, number ideas.
Yeah, we got a bunch. And yeah, I mean, just to kind of add on, and something I just posted that we haven't seen in a while is don't buy the Monday morning gap ups. I'm sure a lot of people are, if they didn't get very aggressive on Friday, they're kind of feeling a little bit of FOMO this morning. Just, be wary of those emotions. Don't don't react to them. Just kind of wait things out, let things set up. Don't chase these moves. But that being said, we got a few charts from members. The first one is from Val. He's looking at PI, which I know Shake is also looking at. He's looking at this 115 level, sort of just a break of this wedge. Yep. So looks pretty solid. I would say, again, kind of referring back to what I was just saying, is like after Friday's move, it's tough to buy that through 115, just because you do have to give it you really have to give it down to that 103, which is, $12, $15 name. You're almost at 10% risk right there. So might be one to like ideally kind of just fill out that little wedge that you drew, and then look to buy, or, maybe if we get like a couple tight consolidation days right up here under that 115, I think it would make it look a lot better.
Definitely great.
Yeah. Next one he's got is this Dawn, which I know a few people were looking at, DAWN through 22, but it looks like I got some news this morning, gapping up to 26. So that's probably one you want to throw it on the bottom end of your watch list and wait, see if this gap up holds, because that'd be really interesting. If this news is like really solid and it can actually hold this area, starts to flag out under that all-time high level, that's a solid one through that 28 area in time. So definitely one to watch. I had a couple. First one was AMLX that I really liked. Looking at this one through 3750. I believe Kush was the one buying this one through that circle that you had just before, through that 32 area. Holding it really well, just kind of giving that next flag. It's a recent IPO, so I think this does have room to move if it wants to get back above all-time highs. But that 370.50 is more of like a low cheat area. Would love to see this tighten up a little bit more, especially with that big shakeout from last week. True support is down at 33. So the more it tightens up, the better. The more I like it. Let's see what we got next. The other one I'm looking at is APO. APO through that 65. This consolidation is like pretty textbook here at a low cheat level. And I mean, if the market does want to rug pull and fail, I could even see this falling over. So both, that green line is the buy, the red line is the sell in either direction. I like this one. Let's see what else we got. Mike. Mike is looking at PLNT through 80.
Fitness.
Planet Fitness.
Okay, I mean, I definitely see what he was looking at. 80 versus 77. Okay, yeah, I mean, that definitely makes sense. Getting back up to this, sort of resist areas, bigger base it's been in. So definitely see, again, if it failed at this time, pulled in marginally, still held this flag. I think it actually looks pretty good.
Yeah, I agree.
For quite some time. So yeah, 380 versus 77. That looks pretty good.
I agree. Next one is PG through 155.
Probably needs a little bit more time to set up. Again, very, large cap, Dow 30 name, kind of lower beta name. So trying, if you can make 10% out of this name, it's going to be a huge win. A name like PG. But again, this is one of those ones, like I mentioned before, this, if it goes today, this is like a tougher buy, 'cause you're kind of buying it third
Yeah.
day up
Yeah.
or second day up. But if it was to hold out here for a couple more days, I think that's the trade. But I think if it goes today off the open, that's a pass. It'll take 155, go, 156 and kind of fade. That would be my guess to go today. But
Yeah.
give it a couple days, it'll be a different story.
Yeah. Next one, Abby's got a couple she's looking at. First one is Adobe, ADBE. Looking at this one through 335 and then 340 eventually.
My dog is barking, so I'm just eating my thing.
No worries.
The 335 might be a little too tight. You're really just buying above Friday's high of day.
Mhm.
I think we need to kind of wait for this to kind of develop more. Seems like you have this gap fill at 60. So this is kind of like the range let me get rid of these lines. This seems to be kind of the range that Adobe is going to be in short term.
Mhm.
Sorry about these dogs, guys. So if you're buying 335, you're risking 15 points. Best case, you're getting 20.
20.
This
Yeah.
is probably a pass until this is like we're like Netflix. Like Netflix into the gap fill here, into this 330 area. It's like Netflix is just trading within this range, and this is all you can really expect in the short term, the next few months, until it really wants to break that to the upside. So when you're in those ranges, you got to really just be aware of them and just know that you're limited with what the stock's probably going to do in the short
Yeah, and I
term.
mean, if you're comparing the two, the Netflix, even within that range, though, it has these clear moves that you can really, take advantage of. Whereas if you're looking at Adobe, it's a lot of the candles are sort of, within each other. So there's not a ton of range to really trade this like a clean trade.
Yeah.
To me, it just seems like you're kind of coming into it in like a choppy area where you're bound to kind of get chopped out versus just buying, the top of the range when it actually breaks out and you see some strength through that area, I think is a much better setup for this. It was obviously on a big downtrend since 2021. And now finally starting to base. So this may need a couple more months of sideways to really get the flow and the fuel of buyers to really get this thing back up.
And even just looking at a lot of charts had this similar, like this half of, like we think of like a U. Most charts, especially like the Amazons of the world, had this was all last year, like this half of the U. And now it's starting to base out. And eventually you get that move back up towards high. It just take, as long as it takes it to break down, it takes no longer for it to get back up there. So she's looking in the right spot, like where where this base is starting to form. It probably just needs more time to form. And it's a much, bigger move than just one, the Friday's high a day isn't going to be as significant as this 336 area or this 360 area, 350. Like these are gonna be much like if she was looking to buy 350, even on this like daily chart super zoomed out, you can see this 350 is like a clear level, where 336, it's like you couldn't find that if unless you have crazy vision. So again, this one just probably more keep on the radar for now.
Yeah. I mean, for these more macro, like big downtrends, I usually just look at the weekly chart. It makes it a lot easier for me to see where it's at and where I should be buying. And yeah, like you said, I mean, 350 looks like the clear level to buy through. But yeah, moving on here, she's also got DG, Dollar General. I feel like I've been looking at this one for literally, I was looking at it all of 2022. Just been flagging up here. Gap down on earnings couple weeks back, but made its way back up towards the middle of this range. And yeah, I mean, she's looking to buy this one through 250.
Yeah, I mean, definitely see the 250 buy. You have to just definitely give it versus at least 240 or what this. I guess you give it to.
Yeah, 240. Last week's pivot, I think, looks solid.
But then it's like the debate of like, are you going to sell it at 260 or are you going to hold it, let it set up and then buy through, because this is now 1, 2, to be the fifth attempt through 260. It already shook everybody out, which is exactly what you would want for this breakout in time. And that's
Yeah.
the debate. If you're going to sell into 260, you're 1-to-1. Again, probably still a pass. If you're thinking of this is a feeler position, you're going to build into 260, then maybe it's a different trade. But that again, you have to know really where you're at. You know, if it's a short-term swing, you're kind of 1-to-1. If it's building in, probably worth picking some up.
Yeah, definitely. I wouldn't be looking to buy this one today, but if it could go sideways a little bit, then maybe you have even a tighter stop instead of versus that 240, and then the move to 260 risk reward makes sense, so that you can take profits there, but you can also hold some for the eventual break. Next one, AMT through 220.
Like we haven't seen a REIT in a while.
Yeah,
Through 220.
220.
Now it's again, it's kind of like you can see. Get rid of all these lines. You can see 225 related resistance. So
Mhm.
here, so it hold, so it hold, so it hold. Really no point in buying 220. Again, it's kind of random. It's not even like really tight out. You really got to get the versus here. You're really better off just waiting for 225 than getting in early and you're running into 225 anyways, and probably with resistance. So this one,
Yeah, I agree. It's a bit of a pass for now, just a wait. Next one, George is looking at DE through 428.
428. I don't, yeah, again, I don't see 428 at all.
Yeah, me neither. I mean, it's just above Friday's high, I guess, but I don't see much there. The weekly chart, I can kind of see it because it shook out like a recent weekly pivot and then closed back above it. So I could understand that from a weekly standpoint. But you know, the thing is you can't only look at the weekly chart. Like you have to look at the weekly, and then you have to make sure that it makes sense on the daily as well. So it all lines up. That's what time frame continuity really means. So on a daily, I don't really see it. And actually, it's actually gapping down this morning, which is interesting since the whole market is gapping up. On my screen, I've got 419.40. I don't know which one's accurate because yours still says 425. But if it is gapping down with some relative weakness, I actually would look to short this personally. But yeah, I mean, if you do want to go long, I think you have to wait a little bit longer.
Yeah.
Another one George is looking at is CMI through 248.
So again, I'm not too surprised with a lot of these setups because you had an amazing day on Friday and you had a lot of the trades getting taken away on Friday. And I don't think most, myself included, again, I did not expect 5 or 6 buy stops to go through on Friday, but that's just what the market does. And then when it happens, it takes all the good setups away for the following day. So I'm not surprised where a lot of these setups are like, it's kind of not significant because there's not much out there that hasn't broken out. If it hasn't broken out on a day like yesterday, or I'm sorry, a day like Friday, it's probably the red flag in itself, which is making me want to cancel that buy stop in that $20 name.
Yeah.
Which I'm going to do in a moment. But there's, you gotta, there's really nothing here. Maybe 250 seems more. This was like the breakdown. This is where this name broke down earlier in the year. It's been resistance. It's battling with it. 250. I can definitely see. There's 248 or 245. I'm not seeing it.
Yeah, I agree. Needs a little more time, especially after Friday's move, which is, like you said, common theme in a lot of these charts. Next one he's looking at is MCK, which again, I mean, this is same thing. So broken record here. It's like, yeah, it's coming right into resistance, but with the move on Friday, it's like if you didn't buy this Friday, just wait. Don't chase this. Let's see what else we got. Alex is looking at BSX.
BSX.
B is in Boston Scientific Corp. There you go. I'm looking to buy this one through 46.50. This one's a little more interesting to me because it hasn't, it didn't have that super strong breakout out of its tight consolidation. It's still kind of sitting in it. Had a nice reversal on Friday. So this one makes a little more sense to me. It looks like it's gapping right to the trigger area. But yeah, I mean, I would love to see this one kind of break and hold above this recent consolidation and then make its way back towards that 48 all-time high.
Yeah. No, I mean, yeah, like I said, it's very tight in here. I think in here, this is, you're giving it, $1, $1.50. This is basically blue.
Yeah, it's all-time highs. Yeah.
This one looks good.
Yeah, I like this one as well. Next one is HTHT. This one he's looking to buy through 44 or 44.50.
Nah, this way for 46. Let's see it right here.
Yeah, I'm with you there.
Resistance. Retested. Just buy 46.
Yeah, with you 100%. And the last one from Alex is KMB.
Millie Clark.
Through 150. I think that must have been a typo. It's probably 140.
140.
Yeah, we'll call it 140.
So again, oh wow, let's going back from this.
Yeah, this one dates. I have a level from that I marked like in 2020 on this one, and it's literally sitting right at that same level. So,
Yeah.
946 times is the charm.
Yeah. Again, this Kimberly Clark is going to be very similar to like a PG type of name. So you can't really expect crazy fireworks out of it if and when it does go. But I can definitely see the 140. But you have to expect sellers at 145, at 150, and 160. So if you're buying 140 versus 133, and your best and realistically, it's going to be a move to here. Probably a pass. But if you can get in where you can risk,
$1 or $2. Yeah.
No, $1's gonna be too tight.
Yeah, like
really,
$3.
you really probably is at least $3. If you can find like $3 worth of risk in this name, 3 to 5, I think it's worth it. I think if you're risking any more than that, it's gonna be tough. And this again, is gonna be a slower name where it's not just gonna go and just go forever. You can, it can trigger 140, go to 140.50, pull back to 138, and then go a week later. So you don't have to rush into this, but you just want to make sure that you can give it the right amount of couple dollar risk. 1 or 2% risk is the most you really want to give a name of this, because you see days like these where the name just doesn't do anything. It's like it's very tight, dollar moves because it's just a lower beta name.
Right, I agree. And then Fred's got a question here. He's looking at I'm looking at the chat. He says, why do we have huge spikes at 8 p.m. every day? Fred, is there a particular stock you're looking at? 8 p.m. our time? No, 8 like 8 p.m. 8 p.m. US time on SPY.
No, forget again, anything SPY related.
Yeah, that's
there's closed orders, there's marked orders, there's no edge in anything with a particular time. You're wasting your time. Literally, just don't look at any of that stuff. There's nothing. People always, is it hedge funds? Who cares? You're never gonna know. You're just gonna spin your wheels coming up with a theory. Just focus on the chart. Don't worry about mutual funds, matching orders after the close and stuff like that.
Yeah, can't do anything about it anyway. So that's
one again, little lesson. Again, we talked about last pre-market call. We talked about how we thought this big DCP was looking like a buyout because it was just trading so tightly, for the last few months. Again, for us, we love that because we want to find tight consolidations. But that's one of the. It's not surprising, like when we said it's going to be a buyout, and 2 days later it was. And one of the members wasn't sure what to do when the thing's getting bought out, things gapping up. Just sell it. Take the win. Again, this wasn't the craziest buyout. It's an oil name. I believe whatever company was buying it out. This isn't like the craziest. This isn't like Eli Lilly buying out some little biotech name where there's this huge upside. It's an oil company buying a pipeline. It's kind of just standard business. It's not going to it's not going to change their business dramatically. It's just taking the pipeline over. So not surprised the buyout wasn't that much higher than where it traded at. But when the name was this near all-time highs?
Oh yeah. You guys special guest today.
Oh, good. So again, with the buyouts, when the news comes out, 931 off the open, just sell. It's never going to have you're never going to see a stock gap up on the buyout and then break out and trade higher. No one's doing that. So just take the win, move on. We will watch this over the next couple days or the next week or two until the deal closes, and we'll just see how it'll just be this candle repeatedly until the deal is done. So,
Yep.
All right, guys, that's that. Again, don't go too crazy today off the open. Be patient, wait for your setups, and let's continue the streak that we had from last week.
Yes, sir. See you guys later.
All right, guys.